Hello, welcome to this lecture where again I get to take you through question 11. I'm taking you through question 11, and as usual, I'm going to take you through the step by step way of handling the question, and at the end of the day, I'll still leave something for you to do. I'll still leave something for you to do because I'm still emphasizing that you have to sit up by yourself and do something. So let's get going. The statements of financial position of PNS as at 30th June 2018 are given below. P Limited, S Limited. So you have your investments, your current assets, and yeah, that. And then the ordinary shares, the share premium, retained earning, non-current liabilities, and current liabilities. P acquired 60% of S on 1st July 2017. Immediately, I want to see the reporting date. It is 30th June 2018, so we are talking 1 year consolidation. 1 year consolidation. Identify the date of acquisition, identify the date of reporting, and note the number of years consolidation you are doing. Sometimes it can be mid-year acquisition. Remember that. Okay, so 1st July 2017, when the retained earning were 5.8. So that gives you retained earning at acquisition, and therefore this retained earning is at the reporting date. Now, your purchase consideration, P paid 5,000 cash. So take note, this is the first one, 5,000 cash. P also issued two $1 shares for every 5 shares acquired in S. So two $1 shares for every 5. So it is 2 for 5. 2 shares in P for 5 shares acquired in S, and agreed to pay a further 2,000 in 3 years' time. So this 2,000 in 3 years' time gives you deferred consideration. Deferred consideration. The market value of P's shares at 1st July 2017 was $1.8. P has only recorded the cash paid in respect of the investment. So you remember they paid cash 5,000, and therefore in the financial statement you have investment as 5,000, but you know that the cost of investment is more than 5,000. It is 5,000 plus the share exchange plus the deferred consideration, but they have only recorded 5,000. So it means for those that have not been recorded, you will record, and therefore you record the share issue, and then you also record the deferred consideration. You have to remember that. All right. And current interest rate are 6%, the interest rate for the deferred consideration. P Group uses fair value method to value non-controlling interest, and at the date of acquisition the fair value of non-controlling interest is 5,750. Consolidate. So you are going to do the consolidation by yourself because we know how to add up. We know how to add up, which means add assets, add this, you add this, you introduce goodwill in the assets, and you will take out this, you take out that from the subsidiary, and therefore you will be adding non-current liabilities plus the deferred consideration, which is a liability, and then you add up the current liabilities, and then the equity will work on the parent equity. So when it comes to consolidation, you must know the addition game that you have to employ. But we must go through that 5 step from the structure 2, group retained earning. So let's deal with it. The structure is 60%, 40%. So let's go through together. So the structure as we have indicated. So here we have the steps. The first is to determine the structure, and as indicated, P has 60%, acquired 60%, and therefore NCI is 40%. Now, with the net asset, go to the financial statement of S Limited. Take the financial statement of S Limited. The share capital at acquisition date is 5,000. At reporting is 5,000 because we are assuming that they did not issue new shares during the period. In the question, nothing of that sort was suggested. So at acquisition, the shares were 5,000. At reporting, they were 5,000. But at acquisition, retained earnings of S were 5.8, but at reporting they were 7.2. It's an indication that there has been post-acquisition profit. What that means is on the day you see retained earning at acquisition of 5.8 and retained earning at reporting of 5,000 is a sign that there is post-acquisition loss. I keep saying that we are making the example with profits, but always remember businesses make profit, businesses make loss. So when you encounter the loss situation, just remember what you will do with profit and do same for loss. All right. Then when you take care of the net asset, you have net asset at acquisition of 10,800, at reporting 12,200. So we are here. And therefore, your post acquisition, which is the difference between the 12,2 and the 10,8, is 1,4. That's your post acquisition profit. Once you get that, your third calculation is to determine goodwill. Determine goodwill. And to determine goodwill, you need your purchase consideration and your fair value of NCI and net asset acquired. And therefore, let's go through the purchase consideration. P paid cash, immediate cash, 5,000 is there. Then P also issued share for share, 2 for 5. So you have to determine the number of shares P acquired. Remember, it is 60%. So P acquired 60% of the shares of S. The total number of shares